Hey traders, happy Monday. This is Ron Hayden at Market Tamer. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the diamonds, the DIA. You can see a massive hammer candlestick formed. And if I take you to the Dow futures, which are the YM, the mini, 9:30 a.m. Eastern is right here, right where the volume spiked. We went straight down around 11 a.m. Eastern, from 11 right into the close around 4 o'clock. We jumped about 800 plus points in the Dow. Now, a couple things. If I zoom out just a little bit, that's a big old hammer, but it's right at support. I don't like hammers at support. I call them rubber hammers or fake hammers. Not that they can't work, they're just not going to give you the same punch, the same strength as a capitulation type hammer where you end up busting support, big hammer down here, and then it rips up. So here's what I think needs to happen. These lows are the end of day better hold. We do not want to close back down between this 240, 250. So maybe that gives the Dow 200 wiggle room points on a closing basis. But where we were earlier today, the target was down here, low 230s, which was another 700 points on top of what it was already down. So the commentary from last night holds. If you're a bull, it's like, ooh, thank goodness. But here's the flip side. When you have a probe, and that's what today was, this was a probe to see if the poop's really going to hit the fan. We ended up reversing right at the last swing low here at the end of June, beginning of July. The next time you come down here, what can often happen is you just blow right through it. And all of a sudden you're trading down around 230 on the Dow, which from here is 1,400 points lower. But what ends up happening is you can be there in 1 to 2 days, if not the same day. So things can unravel pretty quickly if you're a bull. So if you're a bear and you're chomping your teeth and you want to think about maybe trying to get bearish on something, I think that 240, 250 is the line. We start trading below that on the DIA, and that is just not good news for the bulls. I want to bring in a 5 or 15 minute chart and start watching those candles there. The SPY, which I have a bullish position in, again, if I zoom in, big, nice, fat candlestick pattern, hammer candlestick today, but we did dip into the support zone. The key area down here is 255. Still about 900 spider points, S&P 500 points, $9 spider points. We take a look at the Qs. They finished up 1%. They did not dip below the previous low at all. Their support zone is 154, 156. Go to IWM. The Russell actually finished in the red. They gave us a hammer candlestick, but again, it's sort of down here near support. And MDY also finished in the red. It was the worst on the day. They went down there and tested those previous lows. So if I use the mid caps here as a guide, and I go back 2 years, if that low on the mid caps, which let's just round it off and say it's 320. The intraday low today was what? 318. And the low here was 319. So let's say 318. Below 318, then we start coming down into this area, low 300s. Again, another big plunge could take place. But overall, if I do use the SPY as the proxy, what do we have here? I could do this. We have a trading range, and you can see that range held. So again, all eyes are, I think, are going to be on tomorrow, the rest of this week, to see if that support area does hold. Just a couple other stocks to look at, because after today's move, there wasn't a whole lot new that changed. I thought today could be a bigger day up or down. It turns out it was all in one day. But here is Facebook. A little bit of a pop today. Watch the 50-day. This is an institutional moving average in orange. We get above there. That would be the first time that's happened since June. That would be noteworthy. Instant target would be the 200-day. So keep an eye on that one. Apple closed below the previous lows on Friday, but today it tried to get back up there but could not get back above. So even though Apple had good volume today, it's still bearish. It's probably the number one stock I get asked the most about. Two stocks that did have good relative strength today: Lockheed Martin and Northrop Grumman. Let's first start with Lockheed, up 4.56%, spike in volume. Bottom here, hammer back on Wednesday. Now we're getting some follow through. If it can take out 305 and then 310, it's going to look more and more bullish. And then it's a matter of getting through the 50-day in orange and the 200-day in purple. And NOC was up nearly 5% today. You can see the big pop. But also look at these volume bars. We're getting some follow through here. Cleanly closed above the red line. Now the target is the 50-day, which is going to be those previous highs up to 285. This could be an interesting bull put opportunity with the short put at or below maybe 250, something to consider. Of course, always in a paper trading account. All right, I'll be back with you guys tomorrow night. We're going to do another video. So enjoy the rest of your day. And again, see you tomorrow. All the best.